Good morning. What's up, guys? Hope we're all having a good morning here so far. It is time to get to work here, at least on stream. What's up, guys? How we doing? Roy Gaines, good to see you. Kane, how we doing? Good morning. Jason, John, Bruce, Brandon, Peter, what's up, guys? How we doing? All right, decent volatility today. ATR is holding above 20 on the 2-minute chart, which is tremendous for this time of day. That is fantastic. So, however, we are in a range. A little bit of a, I would call that, of course, a little intraday bear trend this morning. Lasted maybe an hour 20. Actually, maybe like an hour. And then now we're looking more at a range. All right, so let's head down, put on, well, I guess, mostly reversion trades here. We'll probably be doing a lot of limit order scalping. But if we break through that low, that's something to watch. That's something to watch. We'll see if we kind of revert back to an intraday bear trend. Of course, we know that the probabilities, you know, if we take a look, bottom of your screen, though, that's the daily chart. Thursday and Friday, we were looking at this and we were saying, all right, this has potential. Does this end up turning into a bear trend market? And then yesterday shot that idea in the foot. We basically reclaimed Friday's entire bar. This is the New York session bars. Daily bars. In one day. So we reclaimed that back up into the range. So what does that tell us? I think we're still in a range market. So probabilities considered. Do we hop back up into the range or continue the bear trend? Well, that remains to be seen. But if we do continue the bear trend, that would be wonderful. Because obviously, when in a trend market, I do think it's a little bit easier to make money, just because you have a very clear price action bias, right? You have it's more obvious, at least for me, the way that I trade. When do we enter? When do we add? And typically in a trend market, I'm not adding, if I'm adding at all, I'm not adding to losers. I'm typically adding to winners, which puts you in the driver's seat, which is a good feeling. This here is a range market, so we're going to do what we can. But again, hey, range markets is going to be maybe 70, 80% plus of the time in the market. So we got to be able to make money in range markets as well. So let's see what we can do. We got a minute 15 left here on this 2-minute bar. Again, top left of your screen now, I've got a 5-minute chart. Top right, that is the same 2-minute chart that we will be executing off of here today. And then bottom is the New York session daily. So let's do it. 60 seconds out. Let's see what we get. Gains, my transitioning from range day to intraday trend sucks. It's tough. 100% it's tough. I think what the easiest way to look at this is to look at the price action on the day. Now, it's hard to get a feel on the day, like shortly after the open, because you don't have a lot of information. But the best way that I think to look at things is saying, look at the bars and say, who's having the easiest time making money? Stop entries or limit order entries? Now, if you've been around the stream long enough, you should know exactly what I mean by that. Okay, stop limit order entries are the entries I primarily use for a continuation setup, whereas limit orders are for something that is a little bit of a softer move, where I think I can get enough wiggle to get a fill, or it's a reversion setup. Okay, so who's having the easier time since, maybe 45 minutes ago? Well, I mean, realistically, limit order scalpers are having much easier time. If you're buying above, selling below anything with a stop limit, you're having a hell of a time making any money. Whereas this morning, obviously, the stop entry bears were having an incredibly easy time making money. So that went from an intraday bear trend to now a range market, right? Can we enter an intraday bull trend, an intraday bear trend again? Sure, maybe. But right now, range. That's how I look at things. It just makes your life a little bit easier. Who's having the easier time making money? And I don't mean bulls or bears, by the way. In a trend, I mean bulls or bears, but really what I'm looking at is limit entries or stop entries. And if the answer is stop entries, then is it stop entry bulls or stop entry bears? All right, 60 seconds out here. Got a little bit of a flat bottom. Keep an eye on that there. Giovanni Joe, what's up, brother? How we doing? Javaz, good morning. Pat, Biblical, James, how we doing, guys? Wolf, good morning. All right, 30 seconds out. Let's see here. There you go. There's the break of the intraday low. Let's see how this closes here. Give us about 6 more seconds here. Let's see if we can get a pullback. Then I have something to discuss with you guys. Okay, nothing there. Next bar, we need more information. So, on that bar, that's a very good learning experience. There's a few things we could have done there. Obviously, we could have bought the rollover. Hey, let's see if we can get a push back up into the range. With this morning's intraday bear trend, when we break through the low and close this strong, I really have a hard time personally buying the rollover, because sometimes what you get when you close this strong at the bottom of a bear bar at the low of day, sometimes what you get is you roll over and push 25 points in 4 seconds to the downside. Okay, so I like to wait for the rollover in this case if I'm going to do anything, because I know, hey, you know, we're still in a range. I wouldn't really call this another intraday bear trend until we get 2 or 3 consecutive bear bars that look similar to this one. So if anything, I'm like, okay, range market, we close near the low, I want to buy it, but I don't want to buy it instantly, because what happens if we roll over and push hard? What happens if, you know, there's a little bit of news filtering in on this bar, causing it to be outsized, and then the news hits and the volume really pours in? Then you're just screwed in that position, which is not really a big deal, right? It's just one trade, but I let it roll over and see. Okay, now if I could have gotten an entry there, a little bit of a bull push, pullback, I would have gotten long, but we didn't get it. So that's one of those scenarios that's a little bit, it can get a little bit wonky, it's a little weird, but for me, in that case, I'll quote unquote miss the trade, though I wouldn't call it a miss because that was according to plan, to protect myself from those bars that do roll over and shoot lower, almost on news, because again, this is an outsized bar, closing at the low in a day where we did have an intraday bear trend. All right, minute 50 out. Let's see how this bar closes. New bar here. Trading Chris, good morning. How we doing, brother? Chris B, do you know what I'm gonna say? Do not ever come around here saying this kind of shit. Do you know how many call options and put options you could have bought yesterday at 3:59? That this morning at 9:31 would have 50x'd your money. It doesn't matter what could have happened. What matters is what did happen. And then you move on. Which is why it's always baffling to me when someone catches a good trade for like 60 points and they're like, oh my God, but the trend moved 90. I could have had 90. It's like, good Lord, you think you're gonna bottom tick and top tick everything for the next 60 years? Of course not. Of course not. Just get your piece and move on. All right, 30 seconds out. Let's see if we get an inside close here. Good to have you, Silver. Hope to see you around more often. Chris, I wrote in my journal earlier, I've never been so mad making money. If you don't stick to your plan and you take it early out of fear, and then it goes to what should have been your target, which, by the way, for me, I think this is confusing for a lot of people. When I put out my limit orders and you see on screen, it doesn't necessarily mean it's my target. I'm leaving myself exposed to news bars, equally or favoring the profit-taking side for the sake of outliers, improving my data, or at least not changing it to the negative side, rather than having a stop out. You know, if I'm running negative reward to risk on a particular trade, I don't want to have a limit order out at 15 points and have a stop out at 30. Because if we get news, it's not equally exposed. But if you break your rules and you take something early because you're scared, and then it goes to target, you should feel bad about that. But if you take it off according to plan, and then it goes another 400 points, I genuinely just don't care. And I think that feeling just fades with time. I don't know, I've always kind of found it curious when people like really struggle with FOMO. Because to me, the answer is simple. Well, every day you miss out on life-changing money 30 seconds into the open. Had you just bought such and such call options the night before or the afternoon before. So it's kind of silly to me to struggle with FOMO. Think of it that way, maybe, if it helps. All right, here's the rollover. I do think we're probably going to see a bit of a more of a trading range here than just an instant bear trend. And here you have the bulls taking us back upside. So what I'm really interested in here is if we can get a bull bar or two closing near their highs, I would like to short that near the top of this little range that's forming. All right, 38 seconds out. Again, man, these bars, they look small, but they're really not. I mean, ATR is sitting at 26, which is good. Good. There's the rollover, inside close, next bar. Gotta hold off on that. Next bar here, 2 minutes out. What's your view on trying to get in on BLSH IPO next week? I don't care about IPOs as far as buying them. If they go in play, I'll trade them. But there's a lot of hype around IPOs. And hype pushes me away. Because hype typically leads to inflated prices. And then by the time everyone loses interest, oftentimes you'll see a fade. And it kind of wiggles around down in the hole for, 36 months before the value is finally recognized. If an IPO goes in play, I'll trade it. That's it. WBF, are we looking for a short or a long? Whatever the market gives us, we're scalping. In this case, it's more probable we get a short setup before we get a long setup, but that can change in an instant. All right, 23 seconds out. Need the bulls to step in, push this thing higher. Struggling with these wicks. Nothing there, no trade. Next bar, 2 minutes out. You know, it's been a little bit since we've done our check-ins here. How we doing? Are we trading evals, test accounts? Are we funded? I know some of you guys trade personal. But you know, my view on this is a lot of people here in the chat were trading evals and they got funded. Maybe 3 months ago when the market was, when we were doing our kind of arbitrary 40-point stop, 40-point take profit with that ridiculously high win rate for a while, the market was just working for that particular style. And we were taking full advantage, and a lot of you guys got funded. And then when the market shift, I noticed I think a lot of you guys were back in the evals, which by the way, blowing funded accounts, like you guys need to realize, if you're not blowing funded accounts, you're not maxing out the ROI, most likely. Now, I get it. Some of you guys are going to say, yeah, but if you're blowing accounts, you're not taking payouts. No. I mean, you need to be taking consistent payouts, have an average positive ROI per account. But if you're never, ever blowing an account, you're probably trading 1 micro in Asia session. You're not going to max out the ROI because you can have higher expenses and make more money, right? That is a thing. The goal isn't to keep expenses as low as possible. The goal is, man, if my expenses, if I can afford to have a shitload of expenses, that's a good thing. I'm going to get short there, and we got to put on some risk here, man. I'm going to short that bull close as we near into the higher end of that channel, and I'll risk this curl. And there we go. See if we can push that back down into the little range here. Now again, I'm giving it some wiggle room, obviously, because the range is never an exact line. It's always kind of a range, and in this market environment, man, it might be a relatively large range. But we got an outside bull bar close. You see this here? This bar closed above these wicks, and for me, since we're in a range, I have to short it. Risk the curl. If this turns into more of a intraday bull trend, then we cut it, move on. Well, it's good to have you, Javaz. Appreciate you saying so. Zachary, 5 Apex funded. Cool, good work. All right, getting a little push here. Not too bad. See if we can kind of come into that low. All right, now again, looking to see if we can kind of come in for a test of that low. That's what my eye's on. Need about 8 more points. 6 more points-ish. Come on, Bears, take us down for a little test here. All right, ATR here still sit about 26. I'd still really like to see a test of this low. But we also have to consider, you know, hey, does this kind of thing start to form? We've been seeing that actually happen quite a bit lately. Get that kind of deal, moving into this type of deal. But no management yet. WBF, how do you remain so calm? I don't know if this gets taken the right way, but I don't care. Okay, and that's not because like, oh, you just have so much money, you don't care. No. What I mean is like, I just don't care because one trade is one tiny little cog in the wheel. And everyone comes in and they're like, if you win one trade, they think you're the best. And if you lose one trade, they're like, oh, you suck. And that only reflects on their misunderstanding of the business model. The business model here is to have edge and then expand it over like a 500 trade sample size, 1,000 trade sample size, a 5,000 trade sample size. That's the business model. So one trade, it just doesn't matter other than how it makes you feel right now. Which is, if all you care about is how you feel right now, good luck doing anything in your life. All right, let's see if the Bulls close this here. 30 seconds out. Yeah, biblical, you just put in more screen time, man. The more winners you have, the more losers you have, the less you give a shit about either. It just... And by the way, the more data you have, which is why when I work with people one-on-one, it all surrounds... It's all based on the data. The more data you have, the more confidence you're able to have without faking it, that what you're doing is working. That when you show up to work every day, sit down at the charts, you're actually being a productive human being for your family. You're not just wasting your time. The only thing that's going to give you that confidence is the data. And if your data's good, the money hitting your bank account, right? So once you have that, it's kind of off to the races because you can just do your job. And, you know, it's still, I mean, it doesn't mean it's fun to lose 6 trades in a row. It still kind of sucks, but at least you know that it doesn't matter. It's just frustrating, really, in that moment. But you still can fall back on, yeah, it won't matter in 2 weeks. Benjamin, this is, you're looking at Ninja Trader, and I have Apex plugged in via Rhythmic, and I have Take Profit Trader plugged in via Tradeovate, and I have Tradeify, Jesus, Tradeify plugged in via Tradeovate as well. Travis, I currently pass about 10% of my evals with Apex. Travis, are those the 50Ks or like the 300Ks? Need some context. Okay, so you pass 10% of the 50Ks. I think that's fine. I think that's fine. It's a little bit low, to be honest with you. But, you know, if you can pass maybe 20 to 30% as kind of like a minimum of your 50K Apex evals, the numbers are gonna work if you're taking payouts. They just are. Okay, because it's too cheap to buy the evals and then pay the activation fee, even if you're paying lifetime, for the numbers to not work, assuming you're taking decent payouts a decent amount of the time. But again, at the end of the day, really all that matters is, are you getting a positive ROI per account on average? That's it. All right, we got a minute 40 out here on this bar. Let's see what we get. So at best so far on this trade, we have been 35, maybe close to 30. Yeah, about 35 points in the money. Wasn't quite enough. Needed about 5 more points to truly get a test. So let's see here. Yeah, I mean, listen, guys, you know what's nuts here is I'm just running the numbers. If we're talking 50K Apex accounts, which the max payout on is $2,000 per account, right? Let's say you pass 20% of your evals. And let's say of those past evals, now listen to me here, okay? Of those past evals, you pass 20% of your evals. Of those past evals, you take a payout on 20% of your accounts. And let's assume that that payout is a $2,000 max payout. Just one. You took one payout on the count. So that is 25 total evals purchased plus 5 lifetime activation fees of $140. What are your total expenses? Assuming you used code BIG, your total expenses are $1,535. And you took one $2,000 payout. Okay, you made $465. You're in the green. And you took a payout on one account out of 25 evals. Do you understand how this business model now works? Do you understand why prop trading is a disgusting, ridiculous opportunity? And then when you think about that, it's like shocking that these prop firms are making as much money as they are. You know why? Because your competition, other traders who are trading prop firms, are just straight up impatient. So they take too much size, which is on purpose by the prop firms. They let you trade 10 minis in a 50K. That's ridiculous. That's too much. You don't need that many contracts. That doesn't mean you have to trade one micro, but you shouldn't be trading 10, man. You lose one trade, the account's gone. They are betting on people not being able to control themselves. So if you have an ounce of discipline, you fucking win. Do you understand? It's ridiculous. All right, let's see if these bulls are able to close this above. I'm kind of looking at these wicks here. And stop is above the curl of this full range. Now, again, at best here on this trade thus far, we've been 35 points in the money still. Again, if you're just joining us here, a little update. 35 points in the money wasn't quite enough. I had my eye on 40 because I wanted to see us give it. I wasn't looking to stop hunt this necessarily because it was a newer level, especially at the time. But I wanted to at least see a test, which would have put us 40 points in the money at least. So, still, same idea here. All right, 46 seconds out from the close here. Let's see how this bulls close this bar up. Joe, not because you would have been green, but would you make any adjustments looking back? No. No. All right, let's see how this bar closes. Yeah, gotta leave it. Gotta leave it. No early management here. By the way, we are coming in for the test, the 5-minute 20. Not that I'm really looking at that as reason to not manage. I'm not managing because that was an equal close, essentially. But worth noting, that is there, top left. All right, here we have 45 seconds left on this 2-minute bar. Let's see. All right, 20 seconds. See how the bulls close this up. See if we have to manage. Oh, nothing there. Leave it on. Why micros versus minis? Because I'm copy trading. Copy trading, trading micros in all the accounts, copy trading across a bunch of accounts. I trade minis in evals, by the way, to cut down on opportunity cost. But when you get into the funded account, especially when you're starting an account fresh, even one mini, you guys, it's too big. At least for like the 50Ks, the 25Ks. But I'll tell you what, I have a 250K, I have a 300K, I have a bunch of 150K fundeds, and I'm trading micros in all of them. My ass, if a lot of you guys would cut down on the time that you're spending in evals and then size down once you're funded, you'd have payouts already. For a lot of you, that would be true. But I think what a lot of people do is kind of the opposite. They spend, 2 weeks in an eval, they're not aggressive enough in the evals, and then when they get funded, they're like, finally, all right, let's get a payout. And then they trade like 7 minis. It's like, you gotta, no. For example, in a 50K, I was just having this conversation with one of my one-on-one guys. In a 50K eval at Apex, I'll trade 3 NQ to start. When I get about halfway, I'll size down to 2. When I get to about 2,500, I'll size down to 1 and just get over the finish line with a single NQ. Then it's funded. Okay, I'll typically just get that done in an afternoon. Quicker the better. 20 minutes, whatever. And I lower my quality standard. So I'll take B- and up as far as setup. Now, again, my B- might be some other guy's A-. I'm relatively strict, but I'll take B- and up in an eval. We don't have time. It's too expensive opportunity cost wise to spend all this time in an eval. So then when it's passed, then I start a 50K funded account with like 3 to 5 micros, and I take B plus and up. Okay? If a lot of you guys just kind of did that, whatever your truth is for you as far as grading and I guess sizing, but you'd probably be seeing a lot more success. But people are, for some reason, conservative with evals because they've already paid. Like, I don't want to lose it, then I lose my 30 bucks. It's like, dude, we're here for 30 bucks, man. Come on. Like, you're here to look for a full-time income. Like, you can't be in a mindset where you're extremely upset if you lose your 30 bucks. Scarcity. Come on now. So value your time. You know, be a little more aggressive in the evals. A little more aggressive for me means what I just said. You know, not 10 NQ. That's still too big. I still think we're in a big old range here. I mean, if you look at the 5-minute top left, I do. I think we're in a big old range here, which means that as far as trade management, I've done the right thing throughout the trade. Now you'll say, oh, but it's red right now. Fine. Fine, man. That's all right. Dromisha, does Apex or Take Profit have more relaxed account rules? Definitely Take Profit. Take Profit is quite a bit more relaxed. I saw you asking about this, I think, earlier. What's the preference? I like them both. They both have their use cases, and I think you should use both. But that's also kind of a bullshit answer if you don't have any yet. So my real answer for you between Take Profit, well, okay, we gotta talk 3 now, because Tradeify offers something that neither of them do, which is why I'm now adding it, because it's interesting. Here's my ranking system, and how I would, if I had the knowledge about these firms that I have right now, but I was starting fresh, here's how I would look at things. If you're trying to bootstrap going full-time, Take Profit, I think, is the no-brainer, because you can take daily payouts and get money coming into the bank account, which is necessary to pay your bills if you're trying to bootstrap going full-time. Okay, now Apex is if you're scaling and trying to just go as big as possible and get the numbers much, much larger, Apex is the obvious and clear choice because you can scale to 20 accounts. You can be a little bit more aggressive within their rules, I think, because their evals are so cheap. It's not really a big deal. And then, you know, the activation fee is whatever, but it still fits into the ROI. So take profit for bootstrapping, going full time, get some money coming in. Okay, Apex when it's time to scale. And if, I guess there's two use cases for Tradeify. I'm a big fan of their Lightning funded because if you have a positive ROI, that's going to work well. And now you're not spending, you know, there's no opportunity cost in the eval because you just go right to a funded account. You just buy it. And they recently changed the deal, so it's a lot more affordable to just get right to funded. I mean, it's kind of ridiculous how cheap the Lightning funded accounts at Tradeify are. With code BIG, of course. But, and then also, I guess if you're really struggling to get funded, you could go Tradeify to just get funded, but I don't really see a reason to pay that to get funded. If you can't get funded in an eval, you're probably not gonna be able to get to a payout, right? So if you're having a really hard time just getting funded in general, I do think you should start at Apex rather than take profit, because Apex's evals are so ridiculously stupid cheap that you can get started for like 30 bucks and just start finding an edge, right? All right, ATR is fading a little bit, but we're still above 20. It's at about 20 and a half. Jomisha, this is like a whole bunch of accounts. This is not one account. I could easily take on $20,000 across all these accounts and like, it's not a big deal. I'm trading small across these accounts. I don't think people realize that. Oh, are you asking about the take profit buffer? Yeah, take profit, you need, well, I mean, all the firms have a buffer you have to get over to take a payout, right? Okay, we've got 60 seconds. This might be a management bar for us. Let's see how this one closes. We've yet to have a real management bar here. Therefore, the trade is still on. We'll see how we close here. Seconds out. Let's see if we have to make a move here. Wicking it back. Big wick back close. No management there for me. I gotta leave it, man. Yes, Joe, that is right. Scaling horizontally, man. Lets you get bigger by staying small per account. Ready to trade micros in the accounts, then just scale the number of accounts, and you get the numbers looking bigger. Doing well, Joseph. Hope you're doing well. Okay, now, again, for those of you guys, if this isn't obvious enough, my stop is right above that tick. You see that? Now, it's entirely possible that if the bulls take out that wick, they, I'm sorry, wick. Maybe I said tick. Either way, same thing. If they wick it through and then pull it back into this big, brutal range. Again, top left of your screen, I still think we're in a range. Okay, now we could just take that out and pull on back and then we top tick the stop out. But a lot of times you're going to be in that scenario, and I don't think for me that justifies just moving the stop up to some arbitrary level 150 points away from the entry, right? It has to still be within reason. For me, the risk that's on here is very much within reason. So I've yet to have a management bar, so, trade's still on. Yeah, man, where's Quicksilver when you need him? He'll come in, drop this thing 200 points. Good Lord, take profit is ridiculously quick. Sometimes it does take, like for example, if you request a payout on like a Friday afternoon, you're usually not getting it approved till Monday. I requested a payout from Take Profit this morning. Like, how long have I been live? I probably requested this payout 90 minutes ago or less. Probably less actually, like an hour and 10 ago. And it's already approved. What's up, Redneck? How we doing? All right, ATR is fading a little bit. We're now below 20. But saying just below 20 this time of day is a nice refresher compared to as of late. Usually it's been below 10 by now. So still a pretty good ATR here. Hey Lucas, good to see you. ATR is the average true range. It tells us what volatility is doing. So it's the average range in points of a 2-minute bar. You're looking at a 2-minute chart right now based on the last 10 2-minute bars. All right, ATR now at 17. I don't want to see that fall off too much. Big, how about the adage saying, don't turn winning trade into a losing one? It's stupid. It doesn't make any sense. That's people who don't know what they're doing, spewing bullshit. Okay, so what? Should I take 2 tick winners? It's a winner. I don't want to turn it into it's that to me is the same as when people say it's green. Green is good. Always take green. Yeah, well, when you always take green, you end up with massively inverted statistics that have negative expected value. That's what happens. So it feels good. It feels good to say, okay, there you go. You get a big pop. That's too bad, man. Nice little winner. Gone, and that stopped us out. That's gonna happen. That's gonna happen. All right, next bar here. We are 65 seconds out. Do we get news? But when people always take green, you know what happens? They start taking tiny little winners. And that's fine. Negative reward to risk is okay if your win rate is good enough to justify that, which is the key that everyone likes to forget. So I think it's a silly saying. Because secondly, it's like, well, even if you're trading price action at best is 70-30 probability wise. Most of the time it's 60-40 at best. Okay, 90% of the time, the best probability you can get with a 1-to-1 reward to risk is about 60%. The other 10% of the time, usually when you enter a big trend, is 70%. That's the best probability you're ever going to get at 1-to-1. Okay, now we saw that like 3-4 months ago with our trades. We had a 1-to-1 reward to risk and our win rate was like 68-70%. Okay, but it's relatively short-lived when that does happen, so you got to hit it hard when it's there. But the always take green thing to me is nothing more than a way for everyone to say it and high-five each other and just pretend that they don't have discipline problems, which is really what that is. All right, we are 90 seconds out here from the rollover of this 2-minute bar. Let's see what we get. Dollar bill, it's 10. The period on my ATR is 10. All right, 35 seconds out here. All right, inside close. We got 90 seconds out. I'll tell you what, I'll be back in 2 minutes. I'll be right back. Don't go anywhere. All right, we are back. And we have 8 seconds till the rollover here. Let's see how this bar closes. See if we have to do something. Inside close, next bar, 2 minutes out. All right, 60 seconds. See if this holds that kind of flat bottom region. A little bit of a newer level. All right, 20 seconds out. Gotta place a limit buy. It's not a stop limit sell, by the way. That is a limit buy, and I'm gonna give this about 20 seconds. And if we don't get a fill, I'll pull it. All right, we did. We got a fill. We'll suck this in. I'm gonna risk this surprise bull bar. And boom, suck that up. Make some room in case we get news. And let's see if this range holds. Or if we end up curling back down, looking for a test of the low, which is what we could have used on that last trade. But let's see how this plays out. Risk is tight. All right, 60 seconds left. Bear's taking this thing lower quick, man. Okay, now what I do want to show you here, this is the 5-minute chart up top left here, right? I still think this is a range. But I'm looking to see, does that get fulfilled on the 4th leg? Meaning, does it curl, or do we end up in a soft little bull trend until it curls a little bit later in the day? Let's see here. Cut it, move on. Okay, 2 minutes out, minute 55. You know, by the way, if you're cutting a loser manually like that, really close to your stop, you gotta be careful, because if it does shoot lower and stop you, and then you hit your close all button, it depends how you have your hotkey set up, because I've done that shit before, I hate to admit it, where your stop triggers and your closeout button is actually like a sell button, and then it opens you short. But if your closeout button is just a close all button, you should be good. even if the stop triggers. Gates, hey, do you find yourself pulling it? If you got into a trend play, but then it turns into a range, I get stuck sometimes. Yeah, you know what, Gaines? If that's gonna happen to all of us, but if that's happening to you a lot, you're probably taking breakout bets in a range market, and you should think about that. Right, that's the big thing. You don't want to be taking too many breakout bets in a range market. Now, sometimes, of course, it'll pay. But I think the expected value is negative unless you're actually in a trend market. So in a trend market, man, I'll hit all the breakout bets, as many as we can, but this is certainly not a trend market. This is a big old range. All right, here comes the rollover. Looks like it's likely to be an inside close here. Next bar, 2 minutes out. Yes, of course. Of course, you gotta be journaling here. Okay, so we are 23 seconds out here from the close of this 2-minute bar. Now that we got this kind of what you might call a surprise, not because it happened, but because of the size of it, right? Surprise bear bar. Got a low a day down here, about 113.25. Toss out a stop limit sell. Let's see if we can place it. Yep, and I will. I'll place it about a tick beneath the low there. Give that 30 seconds, see if we can get a fill. Ten seconds. Come on, Bears, punch it through. Not there, no trade. Gotta pull it. All right, next bar here. Minute 23 out. $58 seconds. Let's see how this bear bar closes. Hopefully, it can give us something. That's good. That's what we want to see. All right, we got 10 seconds here till the rollover of this 2 minute. Let's get a stop limit sell ready and see if we can place it. Good, good, good. There you go, bears. I'll place that. I'll give that 20 seconds, and we won't need it. We'll place this. Boom. We'll risk that surprise bar, at least as the worst case scenario risk. And now, can you see this on your screen? You can. Let's see if we can take out those stops. Right around 113. I want to see if we can shoot down through those stops. That level has been established now. Now, does it turn into a double bottom or a triple bottom at this point, I suppose, if you go back a little ways? Well, actually, here, let me show you on the 5 minute. Top left 5 minute. You know, does this kind of thing turn into somewhat of a triple bottom-ish? Yeah, maybe. Maybe. There's always a counter argument, right? I want to see if we can take out those stops. I'll leave my cursor there for now, about 113. And there you go, by the way. All right, we got 20 seconds out here until the close of the 5 minute bar and the 2 minute. It's going to be a dual rollover here. You can see where I sit. If you look up top, top left is that 5 minute, top right is the 2 minute. Okay, wiki close on the 5, inside close on the 2. Well, I mean, Marcus, is anything really anyone's own? I don't know. I'm sure it's been done a million times. Was it developed on my own? Yeah. But, you know, you gotta do what works for you. All right, 60 seconds out here from the close of this 2 minute bar. Man, these bulls now. Range is all over the place. Strong bar out of the bulls, though, man. You gotta give it to them. All right, my stop's right at 196. Not triggered, still in. 196 and 3/4, 196.75. Still got 2 minutes, 38 seconds left here on this 5 minute bar. Minute 35 left on the 2 minute bar. Dollar bill. No, no, sir. Because they got that 5-minute 20 right in the way. Had that not been there, that would have been managed on the last 2-minute bar, but it's there. All right, stop still at 96.75. 196.75. I mean, it's kind of teasing right here around the 20 on the 5, isn't it? Travis, you ever trade bull or bear flags or pure price action? I mean, I see them. I know that they're there. But I don't care that much. Just price action. I'm a purist. All right, again, hey, 96.75, and we're out. Yeah, guys, the rewind feature on YouTube, it's a give and take. It's great. The DVR feature is fantastic, except for the fact that everybody's watching at a different point when you do that. Like, literally 40 to 50% of the viewers are like 20 seconds behind when you leave DVR on, because it'll buffer and then it lags. And YouTube hasn't gotten it to where it automatically brings you up to date in an efficient manner. So gotta cut that off. I get it. It'd be great to have it all. All right, Bears, let's fade this back down. Take out those stops at the low. That would be a beautiful thing right about now. Tron, Nico, I'm curious. Do you think you could teach your wife, or are you talking about me or you? You think you can teach your wife to trade, for example, like you, and be successful? Do you think this can happen? Yeah, of course. Of course, yeah. I've talked to my wife about this. Like, I could have her being a very good trader in not that much time, but she doesn't want to, because this is what I do. Believe me, you don't need more than one trader in a household, man. One sec, right back. All right, we are back, baby. Again, let's see here if the bears can take this lower. I want to see if they can take out those stops near the low. Well, at the low. And the longer that level sits, the more stops can accumulate, which is good. New, short-lived levels don't tend to have, even if they're low a day, they don't tend to have a ton of stops, but 5-minute chart top left, of course, this low a day here. You know, it's been now over an hour, so you know there's plenty of stops accumulating down there. If we can take out those stops, fantastic. If not, and we pop up through 196.75, we'll cut it and move on. Dollar bill! Nico, when did you stop stressing about every single trade? Yeah, see, I mean, this is the thing. When you've... I think for most people, at least this is what it was for me, by the time you've been paying your bills with trading and nothing but trading, I was, like, I don't think people get this. Like, I was paying all of my now wife and I's bills before I ever posted a video on YouTube with trading. Okay, now... already when you have that data, it just, by default, you have the confidence to be like, okay, this works. When I follow my plan over a big sample size, it works. And I know what I'm doing, and the longer you do it, it's like, okay, I'm all right at this. I made it work, so to speak. It's really hard to fake it until you're actually tracking your data and being disciplined. But I'll tell you what, being disciplined and losing feels a lot better than being reckless and a gambler and winning. Now, in the beginning, you're like, oh, I'm winning, I'm a good trader, until you realize that that's not a sustainable model, and then you have your big blow-up day, and then it sucks, right? And then you do it again and again and again, and then by time number 6 or 7, you're like, I probably should stop doing this. The confidence only comes from screen time. From a whole lot of winners, a whole lot of losers. And the longer you do it, the easier it is to not care. Travis, how much screen time? I've heard at least a year for most. Yeah, I mean, whatever answer I give you is just going to be a complete guess. I was hard-headed. And I didn't really, like, learn from anybody. Which was probably a mistake in hindsight. But that's just, I guess, who I was. So it took me like 24, 26 months to really turn the corner. And maybe 2.5, 3 years to actually be like full-time consistent. like able to pay all of our bills with trading. With the right guidance, it definitely doesn't have to take that long. And with no guidance or the wrong guidance, I've heard of guys who are at it for 10 years. 10 years! No exaggeration, before they're actually making money. And that doesn't mean a lot of money, it just means making money consistently. Some money. It could even just be a little bit. A decade. A decade, man, that's crazy. I think it really is dependent on how soon you accept the truth, which is you need to have edge, you need to track your data, and you need to have good emotional control. And if you get in a trade and you win and you feel like the shit the rest of the day, something's wrong. Because what happens when you lose? You're gonna just feel like shit the rest of the day? That's crazy. You don't want to live that way. Trading, the reason we're here is not to just be stressed out every day with these ridiculous highs and these absurd lows. That's not why you got into this. What's up, Chris? How we doing? Lee, you watch yourself. You watch it. Hey, Michael, how we doing? Yes, I am. Stops at 196.75. Same as before. If bulls can retake this bear bar here, essentially, then we cut it, we move on. But they're struggling with it. ATR, by the way, 15.7. It's fading, but it's still reasonable this time of day. It's definitely been worse. Chris, up to 450K funded accounts now, and loving them. Chris, is that with Take Profit Trader or Apex? There you go. Yeah, those take profit trader 150Ks. Those are a thing of beauty. Jacob says, Nico, any advice for trading while working full-time, especially in terms of having energy to trade? Realistically, what's your diet like? Are you sleeping enough? Hydration? I mean, ultimately, those are the important things for that question. And this never hurts coffee. Rovio, it's NICO. Alright, Bears, come on now, do it to them. Let's sneak downside and take out those stops at the lows. All right, again, 196.75, and we'll cut this thing and move on. And ATR, we're sitting on 15, 16. Again, I mean, it's good for this time of day, but the volatility is starting to vary bar by bar, of course. More and more as we get deeper into the day here. My stop has been at 196.75. For damn near a half hour. Those bulls are just really, really struggling with that region here. At this point, you gotta leave it. Yeah, Joe, ATR, we're looking at about 13, 14. All right, 96.75, and we're cutting and moving on. All right, we'll cut that thing. All right, moving on here. All right, 15 seconds left here on this 2-minute bar. I gotta tell you though, man, this range is just so fucking brutal. This one here, it's kind of a wedge. That I want consecutive bull bars if I'm gonna buy that. So, more information here. Next bar, minute 50 out. Looking at the 2-minute chart up top right. You also got to consider that the bear is going to be looking at that as well. And the bulls, I suppose, right? Hold off of buying if we come into there. So we'll keep an eye around that 220 region. 220, 225 range. And see if they can get up there and then how they react. All right, here comes the rollover of the second 2-minute, kind of a shrinking bull bar. And yet to test that 220, 225 region, of course. About 10, 15 points out. Got a minute 42 left on the 5-minute top left. Watching that as well, of course. You know, by the way, guys, if you haven't yet, join the free Discord. We'll hang out in there. I post updates. And I'll drop the link in the chat. Make your life easy. Again, totally free. 100% free. Right in the chat, Jose. Just click that link. We'll see you inside. Vin, what's up, brother? How we doing? All right, minute 40 out here. That last 2-minute bar closing as a doji. Still, I want to see the test of 220, 225, which is a potential kind of triple top, flat top. You can see on the 5-minute top left. All right, 26 seconds out. Let's see here if this one also closes as a doji. Bears stepping in. Bit of a wake back, but kind of interesting here. Let's see. A lot of this decision making, it comes down to that 220, 225 region. I mean, again, the 5-minute chart shows it the best here. You can see this here is kind of a range. With the current controlled volatility, you would imagine some bears would be like, all right, let's step in right around that region. So I'd like to see a test. All right, 37 seconds out here. Joe, good heads up for everybody. All right, inside close. Well, I mean, listen, guys, I would like to see that test to 220, 225. We'll see how this develops, but we're pushing into the afternoon here. I gotta hit lunch. It's that time of the day. So I'm gonna go hit lunch. I'll come back. I'll trade the afternoon of my own. See if we can clean things up a little bit. But we'll take what we can get, man. We'll trade. We'll be patient until the setups present themselves, and when they do, we're gonna hit them and just see what it offers us, man. Listen, do your job and accept the outcome. The emotion, man, it's crazy. Some of you guys want to be traders. You want to make millions of dollars. Fantastic. Quit crying over losing, you know, a $30 eval. I get it, man. You only have so much money to go around. But if you got big dreams, You gotta bet big on yourself. All right, guys. With that being said, make sure you use code BIG at Take Profit Trader, Apex, and Tradeify for the best deal always. And subscribe to the channel if you have not done so yet. I will see you guys in the morning. All right, guys. Have a good day. See you soon.